Good morning, traders. Welcome to the Flow Show. It's Monday, the 22nd of January. A new week begins. A new age begins. Morning, K-Man. Happy birthday, mate.
Hey, thank you, mate. Thank you, mate. Yeah, new decade, new week, new whatever. Here we go again. Nothing's changing.
Nothing's changing except us getting older.
Exactly.
Exactly. Yeah. Hope you have a good one today, mate. I know you're checking out early. I don't know why you're here at all, as I mentioned over the weekend, but I know it's hard to keep you away from the screens at any one time.
Yeah, if you're born in front of the screens for such a long time, it's hard to keep away. But yeah, I mean, after the Flow Show, I'm calling it a day, mate.
Yeah, good stuff. Go and enjoy your day, mate. Right, well, let's get through what's been going on and what's to come this week. Over in China, the PBOC once again kept their rates unchanged. This was for the loan prime rate, the LPR, 1 year unchanged at 3.45%, 5 year unchanged at 4.2%. China was in supporting the markets again, supporting the yuan, coming in and getting their banks to get involved there. They fixed again down in the 7-11, so still going against what's really happening in the obviously mainly the CNY. So you can see a bit of a brick wall getting put in there. Obviously the 2% band as well playing its role, but they're still fighting it. Chinese stocks continue to get battered despite the support they're putting in over there as well. We're seeing more lows coming in or back down towards the lows. That official, unofficial supported bounce there, washing out as well. Hong Kong as well, that's on its way further south. So not looking good in China. I don't know if this is going to start to affect other markets or if maybe we're heading for a bit of a blowout. Or this is going to remain as a stream of selling. That's, at the moment, it's all negative news. Kay, do you see any which way where we do get a bounce or some positivity?
Yeah, they are really getting a bit more forceful about it because they also tightened the liquidity for the offshore market. And although they did not intervene, I think, or perhaps they did, in the dollar CNH, but they were trying to concentrate it on the dollar CNY because they tightened liquidity for the offshore market. So we may come into a zone where they say that, well, hey, hang on a bit, it's not all completely crap. But we were talking about it again in the room. Of course, we talk about that stuff all the time, and you look at what the rest of the equity markets are doing. Let's say the main equity markets, and the closest one to them, of course, being the Nikkei. It looks as there is a lot of rebalancing to be done. We heard towards the end of the year that some of the big investors were saying that they thought the worst in China was seen at that time, and they were ready to reinvest in China. But I think they got a little bit of they took the saloon door in their face. And what is happening now, I think, is a rebalancing, like out of China into stuff like the Nikkei, into stuff like probably the S&P as well, even stuff like the European bourses like the DAX or the Euro stocks who are gaining, despite China losing as much. And I think that there's a lot of rebalancing going on there. And are we at the end of it? We don't know, but I think at one stage the Chinese government via PBOC, they have this special. I think they set up a special unit as well, second half of last year, to look at all those financial things and under much closer control directly of G. So I think sooner or later we may run into a phase where they say that, well, this is enough now, and then you will have either the Asian or the Chinese market rebound and then we're seeing a bit of rebalancing back into China, which may weigh a little bit on the rest, or just we see a Chinese catch up with the rest, in where all of a sudden you will see the stock market start to rise and things. There's many reasons we can see for this. Of course, the uncertainty on the economy, but also the fact that they did not cut interest rates anywhere. That may weigh on their own stock markets as well. But I think we are not too far away from levels where they will say that, well, hang on a bit, this may be getting a little out of hands, and we see too much speculation against China and harder interventions, perhaps.
Yeah, because I'm thinking, maybe the market's pushing a bit because they're not seeing any, big guns coming out from China and stopping this. And we know they've got the ammunition and the willpower to do so. But also, they seem to be fighting battles on several fronts. Chinese stocks dropping is not good for domestic investors, and if the controlled population are suddenly becoming poorer by the stock market, that's one problem. The rest of the world moving away from China is another problem. So they've got issues on both fronts. I think one of the only solutions they've got, and I've been saying it for a while, is that they need to maybe start coming out and being a bit more Western friendly, to encourage that business back and to encourage investment back, because they're facing outflows, if you like, or problems from both sides. And that's the big issue. And they've yet to pull out any big bazookas and big guns, which is quite unusual for them.
Yeah, but the thing is as well, they're a little bit trapped, right? Because if they now start to lower interest rates, for instance, to try to revamp their local economy, it's probably going to weigh on the currency once more. And then it's a bit of an opposite trap that Japan had in deflation. And I compare it like a little bit like with that, but the opposite problem, right? And I don't know. Of course, the Chinese, they have so much money. They have like $3 trillion that they can go and put to work, but they can stop the rot if they want. But did they lose control a little bit? It's possible, that there is a bit of a losing of control there. And I said this entity that they created at the second half of last year may need to come into action at one stage to massively underpin the stuff for their local their local well-being,
Yeah, no, I agree with that. But it feels like we're building to something. Every day you come in and you see negative headlines and rates kept unchanged. I feel we're building towards something. So be wary of the PBOC is the lesson a lot of people learn. If you've been in this market long enough, if they want to pull some triggers, they will pull some triggers, and it'll be the likes of which you won't see elsewhere. So I think maybe we're heading towards that. But anyway, it will happen when it happens, if it happens. Same for wages in Japan, and a lot of headlines out this morning. PM Kishida leading the way first, saying that it needs wage growth outpacing prices for their virtuous circle to get them out of the deflationary spiral that they've been in and putting themselves up. Wage hikes are needed at small and medium-sized firms, and those are essential to that aim as well. We've had some of the unions out as well. Ringo Union president saying it's significant to discuss with firms before the wage talks. So they want to get talks in play before the wage talks, and all the main negotiations really start picking up steam. The Kaidanran chief says that they agreed to seek wage rises above 2% inflation. So for all intents and purposes, all the unions and whatnot and the PM have had a little chat, and they've all decided to drop all these tidbits on us now, just firming up what we already know, that these wage discussions are going to be a big deal for Japan as well as the BOJ, obviously. As Kay mentioned, Nikkei absolutely ballooning. The sky's the limit at the moment for this one. Real big push up. As you can see, that's a monthly cut chart. Let's have a look, see what it did on the day. Let's go into that one. There we go. So we're hitting our head, found a bit of resistance around 36. We've blown through that. There's no stopping this one. Just from a technical point of view, it's really about finding where the levels are going to be. We've got a bit of support potentially showing around 35. We know the break point is down here, 33, high 33s, 34 level. So for all intents and purposes, this one is going to keep going until we maybe hit some big levels. And I don't see much until we get to the high 37s, 38s. And then we'll have a big psychological battle at the 40,000 mark naturally. Yeah, onwards and upwards for that one. Feels like it's dragging some of the others as well, perhaps.
Yeah.
Okay.
Wow. Completely. I think the thing of the rebalancing is one thing out of China into there, but it's been a case where there's a lot of positive vibes about Japan right now, because people view it really as a positive that the Bank of Japan is probably going to get out of negative territory, and it's a bit counterintuitive, because when we say higher interest rates, people very often think about lower equity markets, but that does not always work that way, and we are seeing that as well with the DAX, the FTSE, not the FTSE, but the DAX, the S&P. It's a bit across the planet where the equity markets defy the laws of gravity despite rebounding interest rates, but it doesn't always work like that. It's in Japan's case, it's been taken as a positive that they finally start to normalize a bit as well, at least initially. Okay, let's also not forget that it started already about a year and a half ago, where people like Buffett started to invest in Japan, and they have like a very big suite of followers, and they are seemingly still buying the stuff up. On the other hand, and that's then the other side of the same medal. The market is expecting the Bank of Japan to go much slower in the rate hikes than the rest of the world has done. So that is then also a case of that the interest rates hikes won't probably weigh as much as 4.5% or 5% rate hikes by the Fed or the likes of the ECB. So all of that is likely helping right now. But you know, I'm starting to think that perhaps, just perhaps, this is starting to look a little bit rapid, though.
Yeah, no, I think I mean that's a reasonable break, you know, from what was real solid resistance up there. So I'm not surprised at a bit of a blow through, but it's always difficult when you're trying to pick the tech off, you know, multi-year, multi-decade price action. You know, I'm not one for using extensions and things like that. So, you know, you've really got a pretty big range here, you know, between this break point and these prior highs, which are, you know, as I said, multi-decade highs. So maybe it's just a case of wait and see, let the price action develop, show where it wants to give the levels. That's the only way you can really sort of trade it intraday from that point. But anyway, it's a good one to sit back with a popcorn and watch where it wants to go for now. Right, over to Europe, and thankfully we're in blackout now. So all the Fed heads, all the ECB heads, all the heads that have got central bank announcements coming up are all got their mouths zipped. So nice and peace and quiet for a lot of this week. But anyway, JP Morgan has brought forward its ECB rate cut expectations now from June to September. They did similar on the BOE last week, if you recall. So now they're bringing their calls up for the ECB further as well. Problems remain in Germany with their train drivers as the unions have called for another multi-day strike. So things still not going well over there regarding work conditions and wages. So almost like we're seeing still in the UK over here, problems in Germany with strikes and the like. Last week's data, Friday's data, all we had really was the retail sales, which came in on the soggy side. Retail sales down 0.2%. Core retail sales down 0.5%. These weren't November numbers. So that's the start of the holiday seasonal retail period that should be a strong one. Well, it wasn't in Canada. However, they also issue their flash retail sales for December, which showed a gain of 0.8%. So that may offset to the negativity from that. But this is StatsCan, so you don't trust their flash estimates with much. Big pinch of salt with those, because it can just as easily come in down 1% as it can come in up 0.8% next month. Canada not known for their accuracy, so we say, Kay, on their data reporting and estimations.
Yeah, that's something. It's funny on the other side, a bit unreliable, right? So that's the problem with Canada. But the Canadian dollar is behaving pretty well, right? Since the end of last week, it's not really. Particularly on the oil bust, there seems to be a bit of expectations that the Bank of Canada is not really going to change much in the big picture, right?
Yeah, no, I agree with that. It's really another. It's got a bit of movement to it, but it's really another pair that's just waffling around a pretty tight range at the moment. And you never know when it's on and off that bloody oil bus. But we've got obviously the BOC this week, so we get our teeth stuck into that and see what they bring. Maybe there's a bit of a counter. That inflation data was a bit sticky. Might have Macklem coming out a bit more on the hawkish side, but then the retail sales give them reason to stay on the easy side as well. So yeah, maybe a bit of a coin toss for the BOC, but we'll get into that in more detail. Back to the data. Michigan blew the bloody doors off. Consumer sentiment coming in much hotter than expected. 78.8, blasting through the 70 expected, up from 69.7 previously. Current conditions, gangbusters as well, beating expectations by over 10 points and 10 points over last month. Expectations also coming in. Inflation went the right way, at least for the Fed. Inflation expectations, 1 year inflation down to 2.9%, 5 year down to 2.8%. Both those, one was expected to stay unchanged and one was expected to rise. So all those numbers are exactly soft landing numbers for the Fed. Strong sentiment, falling inflation expectations, everything going tickety-boo for that. Existing home sales, though, was a little bit on the soft side, coming in at 3.78 million, or down 1%. Was expected to gain 0.3%. I'm wondering whether these numbers, as mentioned last week, might start changing when we get the January data through, seeing as the housing market so far in January, from some of the forward-looking numbers and private numbers, has looked a bit more positive. But it wasn't too good a year for existing home sales last year. Fed Goolsby, before the Purdue, or what they call it, the blackout, whatever they call it in the US, said inflation data will dictate the rate path. If we continue to make good progress on inflation, we need to factor that into the policy rate. He needs to see more progress on housing inflation. Some Fed heads looking at services inflation, some looking at wages. Goolsby is focusing on housing inflation. Fed's Bostic said we want to make sure we're well on the way to 2% before considering cuts, but he's open to changing his outlook on a rate cut timing dependent on the data. Fed's Daily is taking a harder line, saying it's premature to think rate cuts are around the corner. We don't have inflation down to 2% yet, and there's a lot of work to do on inflation, so it's far too early to declare victory. We need to get inflation on a consistent trajectory to 2%. and needs more evidence to feel confident on adjusting the policy rate. So a bit of another pushback there from daily. After all that, on Friday and the data and whatnot, March hike expectations have been cut further. Fed swap see nearly a 40% chance now, was up at 50% through most of last week. On the political front, Ron DeSantis has pulled out of the presidential race. Looks like the battering he got in Iowa was enough to get him pulling out of that one. He endorsed Trump, so it looks like a two-horse race for the Republicans. So that one narrowing there. Trump also praised DeSantis, even though they've had little tit-for-tat discussions, shall we say, arguments historically. All seem to be parallel and going together to see what happens further down the line. On the jobs front, more headlines ticking off about potential cuts. One of our roomies, James, posted a firm, US firm. I haven't got it up there, so I can't remember what it is, and I didn't highlight it, so I can't remember, but some 1,600 jobs, I think, going there. We've also had Ford. It's cutting its F-150 Lightning production. This is the EV side of Ford. Potentially 1,400 jobs affected. 700 apparently going to be moved to their Michigan plant, with some others moved elsewhere. Others have been offered, as they say, the opportunity to use the special retirement incentive program. So sounds like use the program or get booted is the thing there. But again, this theme of hearing about job cuts and just trimming the fat perhaps at the moment, more picking up as we go. Headline for UK. Your Navy is joining the Red Sea operation against the Houthis. You're not getting called up, are you, mate?
My Navy?
Your Navy, the Belgian Navy, yeah.
The Belgian Navy?
Yeah, have you still got
are they sending the one guy who is still in the Navy over there? I mean, I can't.
That's what I mean. You might get called up, mate.
Yeah. I mean, whoa. No, I'm just outside the age limit now. I think I. No, hey, no, really. I mean, that's a bit of a joke. I don't even know how big our Navy is still is, but it can't be large.
1,300 vessels you've got apparently.
Huh?
Don't know where they all are. They must be.
That must be the no. I can't. Must be all the river boats that they think it's the part of the Navy.
Yeah, they're all based in Lake Geneva. They're all locked up there. Anyway, like our sub in Lake Garda. Anyway, that's all I have for the headlines at the moment. You got anything you want to point out, Kane?
No headlines. No, the headlines. I think you covered everything. Just a couple of things that comments that came out over the weekend and over the past few days about the banks. Some quite a few comments there, and some of the big ones saying that they would use this setback in bonds. They view it as an opportunity to get back into the market. And I've got if that idea gets enough traction, makes me think that we could need another extension to what's happening in stuff like the S&P, because if you say that it's a good dip to buy bonds, and they were especially talking about the belly, the 5 and the 7s and stuff. If you think it's a good level to buy bonds, meaning that you think that the yields have reached a corrective peak, that might in turn support the equity markets again, because when the people think the yields are going lower, the equity markets are usually remaining underpinned. So that was one that I found interesting over the weekend. That some of even the big ones, JP Morgan, Morgan Stanley, thinking that it's the time to start thinking about buying bonds again. And speaking about that, it's a very heavy issuance week for the Treasury. They are issuing a lot of bonds this week, going from the really short end to the exactly the belly of the curve. We've got anything from the 13 weeks, so that the 3 months or the 4 months up to even the shorter one as well, 42 days up to the 2s, 5s. That's all to happen this week. So it's a heavy issuance week, which we need to monitor, because if you have so much issuances, there could be two things. One, it's too much for the market, and then we are going to see those yields actually push up, whatever happens elsewhere, or for whatever reason in the data, it may be unwarranted, but the yields will push up if there is not enough people going to those auctions. On the other hand, if the market is buying the idea that JP and Morgan Stanley are trying to put forward, is that we are going to see a lot of people go to those auctions, and then you will have to that should weigh on perhaps yields a little bit, and again underpin possibly the main equity market such as S&P and stuff.
Yeah, so as you can see there, there's the calendar for this week. So you can see we all got mainly on the short end looking at that at the moment. Let's see what's happening in the notes. Yeah, and we got 2s, 5s and 7s latest week as well. So yeah, plenty more. You can see some decent amounts, big amounts going through there. So demand is going to be looked at, as Kay mentioned, once again for that. Right, what else is coming up this week? Let's have a look at the good old calendar. Not a lot going on today, particularly in the UK or US or anywhere else. Tomorrow we got New Zealand CPI coming in, so, and obviously the Bank of Japan announcement, top of the list there. So we'll get to see what the Bank of Japan are going to do for that. Everyone, you should all know our expectations for that pretty low now. It's going to be any comments or rhetoric changes or anything like that that's potentially going to drive markets, but zero expectations for any sort of policy change, YCC change. Which, does that leave a little bit of a door open for a surprise, Kay?
My 5% risk, my 5% risk that they do something about the YCC. I bought a, well, it's a punt and it's cheap, and I bought a 1 week downside euro-yen just in case this week something happens out of the ordinary with the Bank of Japan and the combination with the ECB. We also have Eurozone PMIs coming out as well, so it's my 5% risk play. The only thing, there is no reason right now to keep YCC in place because there is absolutely zero stress in the system. There is also the Japanese whales have already said that they are just waiting for the Bank of Japan to start normalizing to dive back into the JGB market, and they don't expect the tens to really move above 1% even now, or far above. So there is this 5% chance. It's zero. It's really not my base case. But if they would do something, it would be on the YCC front. And on the other hand, that's what I've been saying like nearly every day now. And I think they are going to change just in preparation of what's to come. They are going to possibly change a couple of words here and there in the statement again, just to make the market aware that they are about to act. I'm just looking at the calendar when so they have one overnight, then and then it's straight away March, April, right? So
yeah,
today he should or overnight, tomorrow morning, they should up the communication a little bit, right? So that
it could be a setting up meeting. Yeah, exactly. Okay, we shall see. We'll discuss that. What happens on the flow show tomorrow, unless you either still speaking or it's a late one. We shall wait and see. Yeah, as Kay mentioned, Wednesday we start kicking off with all the PMIs. The flash numbers for January start dropping in, and then we've got the BOC as well, with a bonus monetary policy reports. That means a press conference from Macklem thereafter. The PMIs continue into the US. Thursday, ECB day. That one we can discuss a bit more closer to the time. Then we get some US GDP data, which is that the final numbers? I can't remember. I lose track of where we are. Yeah, final numbers for Q4. So no one's going to give two monkeys about those, considering we're well into Q1 already. We'll keep an eye on those jobless claims after that decent number last week. Could just still be some New Year shenanigans going on in that one. More housing data, new home sales coming up on Thursday as well. Friday is a little bit quiet in Europe, but we get the PCE data from the US. So another look at inflation. Is it going to follow the same as the CPI, or is it going to show something different? I think that's the main thing that we're going to be trading. Is it going the same way, or is it showing, as I said, something different to what we got from the CPI? And so that's to come this week. Right, let's get stuck into some of what is going on in the prices. Sound is echoing like a stadium. Can I check it? Is anyone else hearing some echo, or everyone else okay? Gavin, sounds fine there.
Yeah, maybe.
Yeah, maybe something on your speakers, Cedric. I don't know if you got it open into different things on two tabs or something. But yeah, other people saying it's a-okay. So I don't know what to suggest there, Cedric, unfortunately. Right, looking at things at the moment. Bit of a bore fest this morning, particularly among the majors. Not an awful lot going on. Euro dollar stuck just under 109, still banging its head up here from last week, 109, 109.10, so doesn't really know what it wants to do. Bit of wait and see. Cable as well had its recovery from this test of 126 last week, running into trouble into 127, so happy to sit pretty much in the middle of the range and just mooching around hither and thither. As mentioned, dollar yen doing the same thing. We had to move up towards the highs, made that fresh high, then we failed, came back under all the prior broker levels. Now we're just pinging around between these tight levels. What, 80 pip range, 70, 80 pip range, 147, 60s up to 148 and a half. 148 is looking a bit of a pivot at the moment, but as I say, maybe waiting for Bank of Japan and obviously the rest of the central banks to go past this week as well. One thing, as we mentioned this with stocks, they're breaking out. The S&P finally busted through this level. I've been itching for this one for a couple of weeks, thinking we were going to get the break up. Let's come into a wider chart. Oh, where would you go? The daily. So finally, we've made the break above this zone, 48.20s, whatever. And I'm in my buy stop at last. And I got a bit fortunate on Friday because I had my stop on that at 85. And it was trading around 90s. And I decided to put it down 5 ticks to 47.18. Survived by 2.5 pips before it finally took off Friday afternoon. So a bit of luck on that one. Where it goes from here is anyone's guess. It's even more like what we saw in the Nikkei, where there is no history above these levels. So there's no price action to rely on, previous historical price action to rely on to draw lines or whatever. So it is going to be a bit about level discovery, seeing what the market wants to do. Just like we're showing here in the short term, we've got a bit of a high into 48.60. So it's showing that there's some resistance there. Support is showing around 48.50. It's all very tight, all very small. You wouldn't rely on it, but this is the sort of price action you want to watch. If we get a few sessions where we can't get through 48.60, then it becomes something a bit more solid. Support as well. Where is the main support going to be? You might get intraday support coming in here, 48.50. If it builds strong enough, then it should kick on further up. Obviously, the big break point is going to be the main level down here, 48, 48.10, maybe that prior high 48.20s. If you get a test down here and it holds in this zone, then if you've missed this break here, that might be your opportunity to get in on some longs and see if we can continue this rally. So this is really your do or die area right now, 48.20. Back under there, this will just look like a false break, and maybe all the hard work has to be done again, and then we get a bit of a pullback. So it's going to be an interesting watch to see what with the US stocks on the open, cash open, continue, follow on from the Nikkei, continue this move, and see where we go from here. It's not been as explosive as I thought it might be, but maybe I'm just talking my book and expecting a bit more than what it should go. But it was a big old level, and as I said, I've been itching that this was going to break at some point, and thus it has. We'll see where it goes. Kay, I've not got much other inspiration. Have you got anything?
Just a couple of things, and just stay on that S&P. It's still, you say like it's not as explosive as the Nikkei, but if you look at the S&P since the start of November, for instance, we have done 40. We've done a good 15%. Oh no, 20%.
Yeah.
But even over the last sessions, right? It's still in percentage-wise a pretty decent move. There you can put a bit of a line there, and that should take us up somewhere in the 49.20 zone, which is also an extension zone. If for people who are watching extensions and stuff, 49.20 is where I see a pretty decent level coming up. All right, so somewhere around there. Yeah, perhaps you have it a little higher. It depends where we take the line from, right? But
yeah,
it should somewhere 49.22. I've got a 1618 extension for those watching those. No, for the rest, I am still looking at sterling as being a bit of a positive one. Yeah, we had those negative retail sales. The market has shrugged them off. Euro sterling went up again to that 85.90, 92 once more, and once more it's capped. And so that again tells me we have been changing the box from one level to another, and people are already interested to sell it before 86, the figure. I thought we could have had a little bit of a look there at 86, 86.20 again, but it's capped around 90. So, and when I look at how this trades on those levels, I do think there's a bit of option players in there. I know we can't always see them on the reports, but it does look like somebody is trying to play some of those tight ranges, and we changed the box from 80.20 around 86 to 50.90, it seems, on 85 now. And so we are back at 85.65 actually. Cable is doing pretty okay. I think if you look at the cable, you showed the level there as well, around 127.20s, 127.20, 25. That's if we get through there, I guess we are going to press through a little bit. Don't forget, sterling is also a risk currency. Sterling tends to do better if risk is doing well. When stock markets go higher, risk is doing well. And don't look at the FTSE, and don't look at those other stock markets. The FTSE is one of those things where I absolutely don't get it. But it's when risk is doing well, sterling is usually doing quite okay as well. Derek G is asking about gold, Ryan. I don't know if you see anything. I think we're in a range here between 2000, 2035, 2005, those levels we've showed. The one that's particularly weak this morning again is silver. I think we're on our way, could be on our way into the 21s, 21.85, 21.5, perhaps for those watching silver. But if you keep on, no, sorry. Yeah, I'm
just keeping up with you, mate.
Yeah, I know. So you got the 21.85 there on silver. It's a level I'm watching. I got an alert there to see if I need to do something, but it's going to depend on where the yields are. As well, keeping in mind that large issuance program this week on the treasury market, which if it pulls yields higher, there could be a bit more pressure on those metals. All right, I wouldn't rule out a retest of 2K in gold and a break below 22 in silver to go and have a look at what's happening into the 21s. Well,
yeah, just flipping back to gold quickly, because there is asking about do the Chinese figures affect it? I don't know if it affects it a lot. When you talk about gold and China, it's more a demand play rather than a fundamental play or risk play, unless obviously there's big risk headlines coming out. We are their new year is in February, so that can be a bit of a demand point for gold. But otherwise, no. I've been, while we're watching this line here, I was saying, this 2010 down to the big figure is probably where it needs to hold. It held, it bounced, middle of the range again. A lot of assets are doing the same thing. We've got tight ranges. We're moving between them, and we're always coming back to the middle. The fact that it won't maybe push up towards these high levels maybe keeps the downside in play. If we've got a series of lower highs coming in. We've got a series of lower lows coming in. So, the trend, at least for this year, latter part of last year, this year, is that it's just creeping lower. So, just looking at that, you would think maybe there's a chance that we start breaking down under 2000. I think you're going to find a lot of stops sitting maybe through 1995, 1990. Start breaking that, we may have a bit of an acceleration down. But until then, we're holding the range and coming through central banks data, China, the rest of it, it's not busting out of these ranges. So, yeah, no reason to change that right now. Ali, you're non-cable. Yeah, go on, mate.
If you want, I mean, I'm still a little, well, you are too, right, Ryan? A little long cable? Yeah, we are still a little long cable. I'm still a bit short euro sterling as well. It's a case of don't change if we don't need to change anything. You've seen that big zone in the low 126s, and then that line as well. I'm monitoring around 126 70 80s, and see if that holds, and then we can perhaps push through a little bit. But it will depend on what the Americans want to do with the dollar, especially on a day-to-day where there's not a lot happening, barring the 3 and the 6 months bill auctions later in the day. But then I'll let Ryan do. But basically, yeah, those are positions where we can perhaps agree upon. So.
Yeah, and I'm just waiting. It's one thing I keep saying about cable at the moment. It's probably having one of its longest consolidation period. I mean, cable standing in a 200 pip range for this amount of time doesn't happen often. So the longer it goes on, the more I'm going to be twitchy that it's going to start making a break, be it up or down. So while it's okay to trade the range at the moment, just be mindful, the more times we trade the edges of the range, the greater the chance we get a break, and that break may have some legs, be it down or up. So if you do start breaking, don't think, oh, we've gone 20 pips through, I'm going to buy the dip. Might need to let a bit of time go past, because it could be a quick trip down to, 125 and a half, 125s, even maybe down 124.50 if we break down. Same above, 128, 129s. Could be in the frame if we have a break above this zone up here. So don't get complacent with ranges, even if they're working for you. Always be planning what happens if they don't hold, if you're trading it. Last one from me, Aussie dollar. Another one trading into the zone here. Still staying in there. Tried a little look above 66, couldn't hold it. Now we're just mooching around again, just below 66. So we've got to get it back above there. If we don't, it keeps the downside pressure on, keeps this area in trouble and in the frame for another move. But we're holding at the moment. So short term, I mean, some might draw this as a bear flag. expecting us to come all the way down, but we're not going down. We're making higher lows, higher highs. So even if that's short term, could suggest that we move up, but we're not out the woods either way. It's still a bit of a coin toss whether we regain where we're going or have another look to the downside. This is another one I'm just in a small long, just playing off the levels. Happy to do so. Kay, did you want to take it?
Well, looking at the clock, mate, I think we've covered a lot, right? And we've covered a lot on your
you've got birthday cake to eat.
Yeah, as well. Yeah, I'm actually and I was looking at the clock. I'm actually expecting a few calls. So no, I think
you go on, mate.
Today we are good, right? We have spoken about a lot of things. And basically, I guess today it should in theory be a bit quiet.
Yeah, well, let's hope you haven't given that the kiss of death now that you're disappearing.
Yeah, absolutely.
And we get some volatility.
Hell will break loose soon.
Yeah, exactly.
All right. Thank you, everybody. Have a good day.
Yeah, thank you, everybody. Hope you have a great day, great week. And we shall see you all tomorrow to see what mess the Bank of Japan has left us. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.